بسم الله الرحمن الرحيم.
الرحمن الرحيم. لو أنزلنا هذا القرآن على جبل لرأيته خاشعا متصدعا من خشية الله وتلك الأمثال نضربها للناس لعلهم يتفكرون. هو الله الذي لا إله إلا هو عالم الغيب والشهادة هو الرحمن الرحيم. هو الله الذي لا إله إلا هو الملك القدوس السلام المؤمن المهيمن العزيز الجبار المتكبر سبحان الله عما يشركون. هو الله الخالق البارئ المصور له الأسماء الحسنى يسبح له ما في السماوات والأرض وهو العزيز الحكيم. صدق الله. السلام.
Assalamu alaikum wa rahmatullahi wa barakatuh. Greetings to all. Indian Islahi Centre Aziziya Committee sprouted out from the parent organization to increase the latter's effectiveness and to cater to the demands of the vast population that resides here in Aziziya. IICG Aziziya Committee, like its parent organization, intends to spread awareness of Dawah and other fields of social and economic interest by embarking on a series of talks not only by our own dais, but also by renowned speakers who are the experts in their respective specialties. Indian Islahi Centre Jeddah Aziziya Committee is also planning on starting a madrasa soon here in Aziziya. A dedicated da'i is soon to arrive from India for this purpose. Now, I would like to take this opportunity to welcome our esteemed guests for the evening to the dais, Sheikh Muhammad Subhi, Director of Jeddah Dawah Center. Dr. Muhammad Obaidullah, Senior Economist of Islamic Development Bank. Professor Muhammad, Advisory Board Chairman, Indian Islahi Centre Saudi. Mr. Musa Koya, President of Indian Islahi Centre Jeddah. Mr. Hassan Asena, President of Indian Islahi Centre Jeddah Aziziya Committee. And Mr. Abdul Latif, General Secretary of Indian Islahi Centre Jeddah Aziziya Committee. I would also like to welcome everyone here who have taken time off this weekend to be a part of this wonderful evening. Today's talk would be on the topic, Relevance of Islamic Banking in the World Economy. I'm sure everyone here is aware of the current economic turmoil that has in fact crippled some of the most powerful nations. During all this havoc, a system of banking, Islamic banking, did stay stable and has evoked the interest of various countries. Indian Islahi Centre Jeddah Aziziya Committee has called on for this talk to increase our awareness on the same. Now I call upon Mr. Hassan Asena to preside over the rest of the evening. Thank you all. Assalamu alaikum.
Assalamu alaikum. Alhamdulillah, salatu wassalamu ala rasulillah ameen. Welcome you all once again, and I invite our Sheikh Muhammad Subhi to inaugurate the function.
Assalamu alaikum wa rahmatullah. All praise is due to Allah subhanahu wa ta'ala, the most magnificent, the most merciful. And I bear witness that there is no deity worthy being worshipped but Him subhanahu wa ta'ala alone. And I bear witness that Muhammad sallallahu rabbi wa salamu alayhi is slave and messenger. Allah subhanahu wa ta'ala, if He says subhanahu wa ta'ala that if you try to count the bounties of Allah subhanahu wa ta'ala, they are so numerous to be counted. And the best blessing that we truly enjoy is the guidance to this great religion, the religion of Islam, which we always say it's a way of life. Yet, very rarely we do practice that, unfortunately. Allah subhanahu wa ta'ala said in His book, Quran, that He had, subhanahu wa ta'ala, made selling lawful, and He forbid usury. وَحَلَّ اللَّهُ الْبَيْعَ وَحَرَّمَ الرِّبَا. And Sahabi Abu Darda said, after Rasulullah died, that there is not a bird flipping its wing in the sky, except that they were told about it by the Prophet of Allah, Muhammad sallallahu alaihi wasallam. Also, Allah subhanahu wa ta'ala said in His holy book, مَا فَرَّطْنَا فِي الْكِتَابِ مِنْ شَيْءٍ. We left nothing untouched, untackled in this book of Allah. If we practice Islam the way we're supposed to, if we not practice, if we live Islam by Allah, we will return to be the leader of this whole humanity like we were before. And the Arab, the Bedouin, the nomad, who were nothing before Islam, the same people, they were the leader of humanity in a span of less than 100 years. What changed them from nomadic life, from being insignificant to be the leaders? It is nothing but this great religion, which cover all aspects. Among the aspects that we rarely forget by getting overwhelmed by this modern day life is the field of economic. And definitely you're not here to listen to me talking about economic, rather to listen to Dr. Muhammad Obaidullah, who is an economist in Islamic Research and Training Institute, which is under the Islamic Development Bank. And he is the specialist about this field. I called for the doctor so that to enlighten us about the Islamic banking system, and I hope and I pray to Allah subhanahu wa ta'ala to make everything we hear for, not against us, by putting it in practice. Jazakumullah khair. Please, doctor.
Now, today's speaker, Dr. Muhammad Obaidullah, will address us. Now, I'm sure that most of you present here are familiar with his name, and still, however, let me introduce him to you. He is currently working as senior economist at Islamic Research and Training Institute of Islamic Development Bank, Jeddah. He has been associated professor at King Abdulaziz University, and also at International Islamic University, Malaysia. He was an assistant professor before to joining King Abdulaziz University. And before that, he has been working as associated professor at Xavier Institute of Management in India. Also, he is currently holding the positions of Secretary General, International Association of Islamic Economics since 2003. He is a doctoral research guide for different universities. Also, he has to his credit, he is the founder of IBF Net, Islamic Business and Finance Network, and IIIBF.org that offers professional certification programs in Islamic banking, Islamic insurance, and Islamic investment through internet. Also, he has conducted several training programs. He has 7 books to his credit. Also, he has presented, published 31 academic papers, and so you know that we have today to present this subject a well-renowned authority in the subject. I invite Dr. Please, Dr. Muhammad Obaidullah.
Bismillah ar-Rahman ar-Rahim. Assalamu alaikum wa rahmatullahi wa barakatuh. First of all, I would like to thank the organizers for giving me this opportunity to share with you some thoughts on the Islamic banking experiment as it's going on around the globe. And let us make it a general discussion-oriented session with a lot of questions and answers from your end. And my plan is to briefly discuss initially the theory of Islamic banking, not exactly the various academic theories, but what and how Islamic banking should be undertaken. That is the first part. Second part, I would briefly deal with how it is being practiced in real life around the globe. And that would perhaps help us to see very clearly if there is a gap between the two, how it should be practiced and how it is practiced, and perhaps think about possible alternatives, what could be done to bridge this gap, if any, and perhaps ponder over some possible solutions. Now, to start with, if we briefly look at the history of modern Islamic banking, if we can use this adjective modern, in the 20th century as it started taking roots, perhaps some of the early contributors to this experiment have been academicians. The credit goes to them for very clearly formulating the theoretical model of Islamic bank, how it should be. And many of you might be knowing personally, many of you might have interacted with Dr. Muhammad Najatullah Siddiqui, who did a pioneering contribution in this regard by publishing a book on Islamic banking, which provided the first, the theoretical framework of a modern Islamic bank in the, perhaps in the early 70s. And in practice, as you find, the Islamic banking industry has taken shape. It is already about 35 years old, starting with the establishment of Islamic Development Bank in Jeddah, and quickly thereafter the Dubai Islamic Bank in UAE in the mid-70s. And we are already in 2010. In the 70s, it was basically, there were some people trying to put into practice the ideas that were contained in these early academic writings of how the Islamic bank should be created and how the ideas could be implemented. In the 70s, we had what is called the Islamic commercial banks, and doing the commercial banking. I'll just briefly, later at a later stage of my presentation, briefly tell you about the different kinds of institutions. The Islamic commercial banks were the early institutions, and they were created mostly in the Middle East. And initially, two very promising experiments were undertaken for full-scale Islamization of the financial system in Pakistan and Iran. These are the two early birds in that sense, and also Sudan. These three countries, they tried to go for full-scale Islamization of the financial system, but very soon they realized the bottlenecks, the obstacles, and the lack of adequate research, adequate understanding of the financial system, and how it should be, Islamized in the different sectors of the Islamic financial system. Then came the 80s. In the 80s, you find on the academic front, more and more research was being undertaken on how different other activities that are very important in a financial system, like insurance, for example, how it should be undertaken. The conventional insurance, most of the scholars, they were uncomfortable with that. They found many elements which were not Sharia compliant, not quite in tune with what Sharia prescribes. And generally, conventional insurance was observed to be un-Islamic. But what was the Islamic solution? Again, you find academicians taking the lead, and lots of conferences where alternative models were being discussed, and people tried to find a solution in the form of takaful, or mutual cooperative insurance, which was very close to conform to the Islamic ideal, and which kind of provided a solution where you can do insurance, but at the same time do it without violating the basic norms of Sharia. So Islamic banks and takaful, commercial banking and takaful or insurance were the products that were offered in the 80s. And the countries that were at the forefront offering these products were mostly centered in the Middle East. And Southeast Asia started taking the early leadership in this field by bringing about detailed legislation. Because if you want to really bring in a system, you need the support of the regulators, the policymakers, and so on. Malaysia took the early lead in bringing about the right kind of regulations. And in mid-80s, you find that Malaysia had already come up with its regulations for Islamic banks, and also for Islamic insurance companies. And these regulations or the regulatory support quickly saw a proliferation in the number of institutions, in the kind of activities of Islamic banking and finance, taking firm roots in Malaysia and Brunei, for example. So Southeast Asia again started gaining very popularity very quickly. Then came the 90s. The basket of products became wider. The portfolio became wider, and in addition to these Islamic commercial banks and insurance companies or takaful companies, there were these Islamic investment banks. Investment banks, as you know, they facilitate. They do not directly, intervene in the process, or they do not play the role of an intermediary, as we know in financial jargon. The process of intermediation gave into the process of direct facilitation, whereby a company or the businesses who need funds, they can directly approach the public and raise funds. They don't have to really borrow or approach a bank for that matter. And the investment banks would play the role of, a facilitator in the process. They would help the company or the fund-needing entity to raise funds from the public directly by passing on the right kind of information, by undertaking the right type of marketing, and so on and so forth. Accordingly, in the Islamic world, we also witnessed the birth of Islamic investment banks. And stock market investment started getting popular in an Islamically permissible way. So that was a time when, again, in the academic circles, we found a lot of discussion and how to go about Islamic investing. Because most of the companies you find that are traded on the traditional stock exchanges, whether they are permissible investments, whether one should deal in the stock market, and how one should deal in the stock market, and how companies should raise funds directly. These were the issues that were discussed in the 90s. And then again, the Sharia scholars came to the rescue with solutions. And some of the solutions were deemed to be temporary because there were not good enough solutions which would hold good permanently. So temporary solutions were found, and we will discuss about that briefly as we move on Islamic investing. What rules you should keep in mind while selling a stock when you try to invest, and how you should go about investing, and so on and so forth. Accordingly, Islamic funds, Islamic equity funds, and other kinds of funds, they started appearing on the scene, and the number very quickly, increased to several hundreds of equity funds all over the globe. And this is a time when Islamic banking started, taking roots, not exactly taking roots, but started making its appearance in the Western countries through these Islamic funds. And then quickly, some smart bankers were, I'm talking about the 90s, they were smart enough to find a gap in the product market in the form of housing finance. people in the Western countries, the Muslims, they were not comfortable with, borrowing or taking housing loans. So you had these institutions coming up in the market with Sharia-compliant housing loans. So housing loan was a new product of the 90s, and the equity funds were there. And then in the new millennium, by the time the new millennium was there, almost the entire product line was complete in the Islamic finance sector. And you had Islamic solutions for almost every possible financial need, be it a corporate financial need, or be it investment need, or be it the need of the depositors. You had an answer to almost every possible need. So as far as theory building or providing solutions was concerned, by the turn of the century, this task was accomplished. Then came the practice, the practices or the proliferation of Islamic banks all over the globe. And in this decade, we find that Islamic Bank has been gaining in popularity. The numbers increasing manifold as compared to the previous century. And according estimates vary. Some say it is about more than 500 major institutions all over the globe already functioning as Islamic financial institutions. And if you look at estimates of the funds that are under management of these financial institutions, estimates run 2 trillion, starting from about 700 billion USD estimates, some estimated at 1.3 trillion. There are different estimates. No one has been able to produce a reliable estimate because of the definition problems. Some, people use different kinds of definition to include what kind of funds we should include as Islamic funds. So these statistics alone, tells a very promising story that, and if you look at the different countries that now have been experimenting with Islamic banking, that have, been trying, putting a lot of efforts to come up as centers of Islamic finance. And in this list, you can now include countries like France, countries like China has now recently decided to come up with an Islamic bank, and Hong Kong is vying with other, Hong Kong, Singapore. These are trying to be, basically they're competing with London and Bahrain, who are the traditional centers of Islamic finance, Kuala Lumpur. These new centers are now coming up, and they're basically competing to, all of them, they want a major share of the pie that is called Islamic finance. So this is the brief historical background. Now let us see what Islamic finance is about. How is it different from the conventional finance, and on what basis we can differentiate Islamic banking from conventional banking, Islamic insurance from conventional insurance, or Islamic investment for that matter from conventional investment. There are very sharp points of difference. Though we may observe that Islamic banks coexist with conventional banks, Islamic insurance companies, they coexist. You find Islamic windows being operated by conventional banks. Sometimes it appears that there's a kind of integration that is going on, and perhaps there are many I should say promising statements made by practitioners who would point out that one day Islamic finance would become fully integrated with the conventional financial system, and some would see it as a potential doomsday for Islamic finance when it is going to be integrated. Now, how this process of integration has started, and why is it that it's very important to differentiate between Islamic finance and conventional finance and see the points of difference very clearly, and what are the possible dangers of integration we all can imagine. That we started with a conventional financial system, and many of us were very, very comfortable with this conventional financial system. Many Muslim countries, you name it, they have experimented with the conventional financial system, assuming that this is a kind of system which perhaps Muslims can, live with. But again, thanks to the scholarly works of many of our scholars, modern scholars who have contributed very significantly, they have been working even tirelessly now to show very clearly what are the points of difference and why, you need to be very, very careful. You need to be vigilant. And it is not just the duty of the Sharia scholars, of those members of the Sharia board. It is also the duty of every individual Muslim to understand what is the difference points of, what are those points of difference, and why, and what are the points that one must keep in mind while dealing with an Islamic bank. And a bank may, if you look at the charter, its vision, mission, goal, it may profess or it may claim to be an Islamic bank, but as we shall discuss very clearly, what are those points of, I should say, corruption that has come in the Islamic financial services industry, with some institutions moving away from what is called the Sharia compliant or the Sharia-based Islamic finance. Now, if you look at the basic norms of Islamic finance, which are the basis of differentiating between the conventional and the Islamic financial system. Now, both start with a very similar objective of providing for a link between people who have got surplus funds and the people who do not have enough funds to carry on with their business activities or their entrepreneurial activities. So if you don't provide a link, or you don't have a bank, or you don't have other components of the financial system, or you don't have a array of the kind of instruments we see, by instruments to simplify it, the various products like deposits, like loans, like insurance schemes, or for that matter, the investment products, the mutual funds. If you don't have it, then there will be no link between the people who have things. And most of the people who are in this category are people like you and me, who have a recurring income, and our expenses are below our income, so we save some amount. But we do not have, most of us do not have the entrepreneurial ability. We cannot, take up investments by ourselves. The characteristics of a good saver are very different from the characteristics of a good investor. We all know this, of a good entrepreneur. They're different. And the entrepreneurs, it's a smaller minority class, but generally they find that their own funds is less than what they would require to undertake to carry on their investment activities. So there is a very important need to provide a link between the two, and this link is provided through this array of financial institutions called commercial banks. They come up with several types of products. They offer through various deposit products. They try to mobilize funds from people like you and me through various savings-related products. And then they deal with the entrepreneurs, the corporates, and lend them through a variety of financial products. They invest. So there is a departure between the two, and that is what we understand by basic commercial banking. And then we have the investment bankers who basically help the companies directly approach the public and raise funds from them by selling, offloading shares, equity. And you have also the stock market, which provides liquidity, where continuous buying and selling in the stocks that goes on, so that people can come out of shares whenever they want to. So this is something that people like you and me would welcome. We would like an opportunity to liquidate our investment, to sell off our investment and get a good price. So that is a rationale for having a stock exchange. All these different components of the financial system basically try to provide an effective linkage between people who have savings and people who want to take up investments directly. And an Islamic financial system is no different. Its basic purpose is same. And this purpose is very much in line with the objective of the Sharia. We know the objective of Sharia. What are the basic objectives of Sharia? From Islamic scholars, we know that these are the 5 basic objectives that Sharia tries to achieve. Or, all Muslims, through their activities, they must try to achieve. And that applies to an Islamic economy. In an Islamic economy, all your economic affairs must be managed in such a way so as to lead to the fulfillment of these basic Sharia objectives. These objectives are protection of religion, protection of deen, protection of self or nafs, and protection of intellect, protection of lineage, and protection of property. And later scholars, they say, modern scholars, they will add to this protection, they would also add.
Second question is, how far the sukuk, the Islamic bonds, affected the recent Dubai financial crisis and loan taken from the Abu Dhabi government or something like that?
Actually, when it comes to efforts, of course, many of us are aware of the efforts made by, the first major event to create a splash in the Indian media, I would say, was the possibility of having an Islamic bank in Kerala. And this created a splash because for the first time it had the support of the government of Kerala. Very clear in the articulations, in the various statements made by political leaders and so on. So obviously it caught the attention of the entire country perhaps, or at least those who are interested in the economics and business of in India. And at the same time, that is again at the, that's as far as my limited knowledge goes, I read newspapers and try to get information from that. But at a more, at a grassroots level, I should say, more important than, to me, and I may be wrong, than political lobbying is to create an awareness among the people. Because Islamic Bank has born out of a burning desire among the Muslims. Now, this principle is basically doesn't give you a permanence of the fatwa. Even if something is allowed as on grounds of very dire necessity, because the entire community will suffer if you don't give a permissibility, and they lose wealth. But this cannot be a solution. The solution is to create your own institution. And this awareness, various people have been trying to create at different levels. And personally, I have been in touch with the Islamic banking convener. In fact, the creation of the Indian Centre for Islamic Finance in Delhi by Jeddah Islamic Hind. If I may be wrong, I'm not too sure about that, because nowadays, alhamdulillah, most of us, we forget about our organizational linkages, our affinity to specific groups. Many of our brothers have been working in tandem as together, and they've been trying to take the agenda forward. And so at this grassroots level, many people are working, and in fact this meeting is also a part of this awareness campaign. And but in my student days, I should say, I must give a credit, though I am not a member of this organization. Jeddah Islamic Hind did publish the first book on Islamic banking way back in the 70s. And it has been in the forefront as far as creating a consciousness of awareness of the Islamic banking and the awareness about riba prohibition. I remember, many years back, there was a campaign, 45 days campaign, which was launched by the Kerala unit of Jeddah Islamic Hind, if I'm not wrong, and basically to create awareness among the masses about the ill effects of riba and how to get over it, and the need for interest-free institutions and so on. So, at different levels, of course, people have been working to create this awareness that we must demand something if we need it. So we need Sharia-compliant banking, so there is no reason to be shy about it and take a recourse in the principle of darura or necessity. Thank you. Sukuk, in fact, when you try to find fault with something, it's better not to take names. But I certainly would find fault with the kind of sukuk that were being introduced in the market, because it is open to any researcher. It's in the public domain, the documents. And it's not just one sukuk that was really the culprit, I should say, or where there was lack of transparency or many others. In fact, most of the sukuk, very large number of them, unfortunately, they try to hide behind the legal language which a common man doesn't understand. And there was this issue of common law versus the law of the land versus Sharia. For example, the law of land would not allow certain things, but you claim to be Sharia compliant, but you have to follow the law of the land. Then you take, again a fatwa from your Sharia scholars. They will tell you that as a temporary recourse, it's fine to go to abide by the law of the land, even if, because it doesn't permit certain things. Like banking, for example. In India, we don't have, the law doesn't allow us for a bank to engage in any kind of, real estate holding or any kind of speculative transaction or any kind of, profit-sharing partnership, musharaka or mudaraba. In this case, there were similar problems with the ownership of the physical asset by the sukuk holders. And again, the sukuk holders, perhaps it was felt that many of the sukuk holders are high net worth individuals. They are not so concerned about the Sharia compliance in spirit. So basically and they would like to invest only if they are offered an assured income. So you try to offer an assured income to them. And how do you do that? Through bringing in some features which basically dilute the Sharia, the spirit of the Sharia. How? Through capital protection features. Again, as I said, you assure a certain rate of return, but you put a cap and floor. Both ways, you make sure that the investor would actually get that kind of a return. And this return would have no linkage, need not have any linkage with the return that is coming from the underlying asset. The physical assets are all desert land. No revenue comes out of that. But you have the chance now to show that as an asset underlying the sukuk issue. And you promise a return which is basically a camouflage interest rate, which is a conventional financing transaction. You are not constrained to do that because you are not expecting any return out of the underlying asset and to pass it on to the investors. Whereas a Sharia compliant sukuk would require that those returns which are actually being generated out of the underlying asset, let's say it is a portfolio of houses, it is a rental income of the houses which can be passed on to the sukuk holders. If there is no rental income, there will be no return. So there is no question of providing an assured return on the premise that if the actual return turns out to be higher than what we have promised, we will take it back because it's an incentive fee for us. And if the actual return is less than the assured return, we will give a qarde hasana as a compensation. But ultimately, we will give you the return which we have promised. Then it is another way of getting around the riba prohibition. And the crisis appeared on the scene because of the global financial crisis. Because this transaction, though it is called sukuk, is like any other bond, any other conventional bond, where you are now forced to provide the returns that you have promised under legal obligation. An underlying asset has no meaning, or the return generated on underlying asset has no meaning. So obviously you are as big a culprit as any other conventional player in contributing to the crisis.
It was excellent lecture, giving clear picture about the concepts and all that. In the beginning, you defined the bank as providing a link between the people who are saving and those who are entrepreneurs. I'd just like to know, because you are in the creed, is there any similar institution existed in Islamic world before or not? What was the mechanism that was taking place arranging parallel to the bank system? My second question you can ask that. You know Dr. Abdul Khan.
Yes.
He has proposed a alternative for Islamic banking with the institution, how they can operate. If you are not aware, then you will not be. If it is aware, how relevant it is for today. And the third one, if there is a time, you just say, today all banks, commercial banks are opening windows, Islamic windows, and you call it integration. Is it really integration? Do you think this both can exist together and they can be okay?
Yeah. I'll address your third question because it's the simplest. I don't buy the idea of conventional windows. I don't think it's possible. Similarly, this is one factor which contributes to the uncertainty. If there is if the knowledge or the information that is available to either party to the contract is either inadequate or inaccurate. If it is inadequate, then some important information has not been provided. For example, those of you who invest in new shares, you might have seen the regulator coming up in Indian stock markets. We have the SEBI, which forces the companies to release all relevant information about the project in a proper format. so that the investor can read it and understand and then take his own investment decision. We are dealing with the stock markets now, where we assume that the investor is quite rational and also has the ability to understand. But still, the regulator is forcing a company. The company cannot hide, for example, a legal case pending against it, which could end up in a lot of liability for the company. Any unpalatable information which could affect the investment decision, the company cannot hide it. That's the rule of the regulator. And this is very much in line with the principle of freedom from gharar. The contract will not be valid even according to Sharia if the company has deliberately withheld any information, adverse information, which could affect the true worth of the particular investment. And in a day-to-day sale purchase, of course, we can easily understand this information, the importance of this. I buy a car from you, I have not seen it, and you have passed on wrong information about the car, the year of manufacture or its conditions and so on. I have not seen it. I make the payment and go to approach you for taking delivery, and then I find that the car is not in a proper shape, and it was the description or the actual condition is very different from what you had specified. Then, of course, under Sharia, I have a right to annul the transaction, to cancel the transaction. Now, this is because the first transaction itself was invalid, according to Sharia, because this very important information of the proper condition of this, the product that is being sold has been withheld deliberately or otherwise. It need not be deliberate. But if it is an important, relevant information which is found to affect the value, which has not been provided, even if with mutual agreement the contract was made, it doesn't have a place in the Islamic system. So basically, Sharia wants full transparency, wants all the parties to be in the know of what they buy and sell, and they must know the value they are receiving for the value they are giving in the form of money. And of course, the riba prohibition is there. You cannot increase, that the liabilities cannot go on increasing on their own. In fact, many people from here, if I can briefly take a look at the most popular product, that is Murabaha. Many people would compare it with the basic loan, the conventional loan, and indeed that is one of the reasons why this is a very popular product among Islamic banks, accounting for more than 75% of their total activity. The reason is that it comes dangerously close to a conventional loan, very close. But scholars have, they are unanimous in accepting it as a valid contract. Why? Because there is a buy and sell involved there. The bank is supposed to, if you want to buy a car, you want to finance the Islamic bank to, in a conventional bank, the bank would simply have given you a loan, for example, for 50,000 riyals, you want to buy a car, you want financing, car financing from a conventional bank. The bank would simply give you 50,000 riyals and ask you to go and buy it yourself. You may buy the car or you may utilize it for any other purpose. The bank is not concerned. The bank wants its principal amount plus the amount of interest at the stipulated time period. If you go to the Islamic bank, the difference is, and let's say the bank has a Murabaha product to finance this car purchase. The bank will ask you a proper specification of the car you want, and the dealer, the vendor who is going to sell you the car, all the details of that, the price and other specifications. The bank will ask you to collect all that information and approach and go, come to it. Then when you have all the details, the bank will buy the car from the vendor at the price and then resell it to you at a mutually agreed profit. So the bank is becoming an owner of the car for a very small time period, but it is becoming an owner, and then it is reselling it to the customer. That is what makes it halal in the eyes of the Sharia scholars, because the bank is now exposed to some risk of ownership of the car, even if for a very fleeting time period. In fact, initially we had a lot of debates, seminars devoted to this topic alone. Is Murabaha Islamic? And should Islamic banks be allowed to engage in this kind of products? Now, some of the scholars were more liberal. They said, okay, this at least it is okay in form. In fact, some banks were found, those initial early birds, they are found to do away with all the requirement. They would just trade on the basis of paper transactions or fictitious transactions. There would be no vendor, no car, but still the car purchase and resale will take place. So this was frowned upon by many other scholars, and would say that in practice you cannot control this. So it is in no way different from the conventional loan product or a basic loan. Now there are ways to, a Sharia scholar would tell you more, more elaborately or more minutely, in fact, using the finer points of distinction. But economists have found another very, valid justification why murabaha is Islamic, why conventional loan is un-Islamic. If you try to understand this, again, from an economic point of view, we have some very promising researchers who have come up with analysis of a murabaha as compared to conventional loan. The basic point of difference is, in a murabaha, the loan amount cannot get compounded. You charge the profit only at the first instance. And even if the customer is going to default, doesn't pay up in time, the amount that is due, which is a debt amount on the, due on the customer, it cannot increase or it cannot grow on its own. While a simple, conventional loan, it appears very simple. That's how it's very attractive also. But it will go on compounding. The amount of loan, the amount of what you owe to the bank will go on compounding with time on its own. The maturity value of the murabaha is fixed once for all. Once it is agreed between the bank and client, no matter what happens, the bank cannot charge you anything more than that. And this creates a major point of difference. In fact, if you allow an amount to compound, basic finance textbook will give you horrifying, pictures, where even a $1 investment invested today, how it can grow into billions and trillions just with time at a certain rates of interest. There are numerous examples of it, arithmetic examples. Simple arithmetic will tell you how, a big amount it can grow into on its own. The fact of the matter, in fact, is one of the economic justifications of the riba prohibition, that in real life, real wealth doesn't grow on its own. It cannot, it requires productive efforts, it requires risk-taking, and which puts a cap on the kind of growth that you can experience in real life, in real wealth. That is, of course, is going to be shared with between the population. But when it comes to money, the moment you permit riba, this money is going to, and the debt is going to grow on its own. And recent papers by Islamic economists who try to, offer Islamic economics as a solution to the global financial crisis, their major point of emphasis has been this, that a murabaha debt, even if it is murabaha, what you say as the closest to the conventional loan, even a murabaha debt cannot grow indefinitely. It has a certain finite time period beyond which it will grow only once. But beyond that, there will not be any automatic growth in the murabaha created debt. And there has to be a real transaction in a proper murabaha. There is always a real trade transaction which forms the basis of the product. Whereas in case of a loan, like credit card loans, for example, of course there are transactions. But when it comes to the loans given by banks, the loan amount, very quickly there is the link between the underlying product's value and the loan amount could be snapped very easily with time. And this is what happened with the housing loans which were given in the US economic system. That was the beginning of the financial crisis. When housing loans were given at very minimal rates, and people used to flock and avail of housing loans because of the attractive rate of interest, very low interest rates. But that very low interest rate quickly, transforms the initial loan into a huge liability, which very quickly loses its link with the underlying value of the house which has been financed. And when there is a crisis, when the bank starts asking for the payments, the house owner is unable to pay, he wants to sell off the house doesn't fetch him the money, or the bank forecloses the loan and takes control of the house, but the value of the house that the bank now has obtained through foreclosure, that has nothing to do, that is way below the amount of the loan. So what happens in a conventional system, because of the operation of riba, the amount of credit balloons up at a very fast rate, and the real economies do not grow at that rate, as a result of which the link between the financial system and the real economy, that snaps at some point in time, and that is the time when you have a crisis. And if you look at the history of crisis, I'm not a scholar of crisis. There are economic experts who basically do their research only on the crisis, and there have been many crises. You look at the history of the global economy, and every time the initial trigger could be different, but the reasons would be same. The reason is the compounding of interest leading to departure of the system, the financial system, from the real economy. And then the real economy, it becomes like a inverted pyramid. In an inverted pyramid, you have at the bottom the real economy, which is a very small, in terms of quantum, in terms of magnitude, and on top of that you have a huge debt, residing over it. And the only way this could get corrected is through a crisis and the subsequent crisis management mechanisms. You just have to write off some debt. There is no other way. And when you try to write off such loans or through other packages, bailout packages and so on, what basically it is a crisis. And these crises are going to happen because of the very definition of riba, which is found to be permissible by our conventional economists, by the mainstream economists. They find no problem with riba. And even in the context of the present crisis, initially there were many economists, conventional ones, they did find a lot of merit in Islamic economy, but very quickly the lessons are being forgotten. And again, you don't find really a change in the thinking or any kind of a departure from the mainstream thinking, where riba is not only good, it is supposed to be the driving mechanism of the conventional financial system. We are back to the square one, and again the economy would perhaps keep ballooning up, and again some crisis, impending crisis in the future. The world economy, unless it frees itself completely from riba, it is never going to be free from the clutches of riba. And the crises are a natural outcome of such riba. Coming to the Islamic financial system, we don't have really a very satisfying scenario. If you are a little cynical minded, you'd find a lot of faults with the Islamic banking and the way they operate, and there have not been many of them, in fact, not all. Many of them have not really been able to fully understand what the Islamic economy stands for and how to differentiate, because of, again, lack of vigilance on the part of the consumers. Many of us are customers of Islamic banks, but we do not know, we do not ask the right questions. Globally, you don't have as yet a consumers forum, which is there to ask questions to the bank and regarding the schemes, the transparency, the underlying fatwa, and what is the Sharia justification. No one asks any question to Islamic bank as of now. And they are supposed to have a Sharia board, which many of them, again, there is a problem of accountability. You take a look at the way Sharia boards function. There are many eminent scholars, but the basic structuring of the Sharia board, that is problematic. Why it is problematic? Because if you are on the payroll of the institution, then your freedom is curbed to that extent to express your independent opinion. What you need is independent, either Sharia scholars, independent Sharia auditors, or independent observers, independent think tanks. Now these are taking shape, fortunately, but it takes time. And on the other side of the game, you have the smart bankers who very quickly take the cloak of an Islamic banker. And in fact, most of the Islamic bankers of today, you will find they have a conventional background. And if you are trained for 30 years in conventional banking, dealing with conventional credit, conventional loan, conventional mechanisms, it takes time to shrug off that inertia that you have developed. So many of them are still comfortable with the conventional way of doing things. They're trying to do a better job, but still they cite many examples, market considerations, and so on. In fact, the customers are also they are also to share the blame. If you don't ask the right questions, if you don't demand information, no seller is going to provide you with the information. So it's very important to understand, to develop a basic understanding of what makes a product Sharia compliant and why a particular product being offered, why a car financing scheme offered by an Islamic bank is Sharia compliant. What is the basis? This question must be asked. There are very few Islamic banks which put their fatwa, which they have obtained from the Sharia scholars, on their websites. Not many. Which points to a basic lack of transparency. We all know the names of the Sharia scholars are marketed around. There are a limited number of Sharia scholars. We know they are reputed scholars. They sit on the boards of many of the Islamic banks. But the entire world, the Muslim world, cannot depend on this handful of Sharia scholars for doing their day-to-day business. These are serious matters. And for serious matters, you need serious, much larger population of serious researchers and Sharia scholars and auditors, independent think tanks to keep a careful watch on what is happening in the Islamic banking world. So these are the basic norms that I just discussed: freedom from riba and freedom from gharar. And in fact, with respect to each one of the product, it is unfortunately some of our practitioners, they have found a way out how to get around the Sharia prohibition, but still label it as an Islamic product. And I think newspapers are nowadays abuzz with many of such abuses of such misguided Sharia scholarship. For example, we know about the Islamic bonds, the so-called Islamic bonds, and till 2008, this sector was booming away to glory in all parts of the globe. In fact, countries like Germany, Japan, all these have entered into the fray of Islamic finance, basically to raise funds through Islamic bonds. This has been the primary factor, motivating factor for many developed countries to now come into the fold of Islamic finance. And this sector was, really growing at an astronomically, exponential rate till the last quarter of 2008. Now, what happened in this year? A very prominent scholar, Justice Taqi Usmani, he came up with an analysis or with his own opinion that 85% of the bonds which have been issued during the last couple of years are not Sharia compliant, and that created big ripples in the Islamic financial market, and people were forced to take a relook at what underlies these Islamic bonds which have been issued recently. And indeed, any serious researcher of these Islamic bonds would tell you that most of them, they lack in transparency. They do not divulge important information. Who owns the assets? In fact, an Islamic bond, if I can simplify things, it operates in a very simple fashion, that bondholders together, collectively, you own some physical asset, which was earlier owned by the company issuing those bonds. The company is selling in the first place that physical asset, be it a real estate property or whatever, physical property, to the group of bondholders who collectively now own this asset. So whatever income is generated on this asset are supposed to flow into the hands of the bondholders because they are themselves now the pro rata owners of this physical asset. But when these bonds were sold, they were covered in such technical and legal jargon, running into sometimes 200 plus pages, the offer document. No individual investor had the time or inclination to delve into what really was implied through those fine the language of those offer documents. No one really saw that there was no question of any ownership. The real ownership was not there, which means effectively these bonds were camouflaged as Islamic bonds, sold as Islamic bonds, but they are in no way different from the conventional bonds. Basically, you are assured, the investor is assured a certain definite rate of return, but all you are told is that this return is coming from a physical asset. Now, that doesn't make the instrument Islamic. It was promised to the investors, to the bondholders, that anything more than that is a kind of incentive fee for the investment manager. Anything less than that, the investment manager company, the bank which is helping the company to sell these bonds, would compensate through a qarde hasana. Now, this kind of spurious mechanisms were used, and sometimes which was called, broadly categorized as capital protection. Now, an investor would definitely like capital protection, but at what cost? At the cost of Sharia compliance. If you are looking for assured returns without taking any risk, in effect, you are looking for riba. And if the instrument is camouflaged as, Arabized form, and if the instrument is offered, has the backing of some Sharia scholars, that doesn't make it Islamic. You need to listen to the right Sharia scholars. It's very important. And the responsibility doesn't end there. I have heard many practitioners, even bankers, who are very, very uncomfortable. They have left conventional banking, come into Islamic banking to get away, to get rid of their feeling of guilt. Because working for a conventional bank is not something very desirable for a good Muslim. He would try to get rid of it. And many of our present-day Islamic bankers, they're basically good Muslims who have tried to get out of conventional banking and get into Islamic banking. And many of them, they continue to carry this guilt, feeling of guilt, when they see what really goes on in the back office transactions, in the accounting entries. These are the same old accounting entry that, procedures are followed. Income, interest is labeled as profit, but everything else remains same. There is no real asset which underlies the transaction. So, but they tend to take some consolation in the fact that this is being supervised by well-known Sharia scholars. So it is the Sharia scholars who is answerable, not us. The fact of the matter is that even an individual can make a lot of difference. If you make your voice, heard at the right forum, and sooner or later you will find people who tend to agree with you, and this will not kill the industry. No, Islamic finance industry has come to stay. People have seen how an Islamic financial system can thrive, can sustain itself. They know it's going to, so no one is going to kill the industry. In the early days, some of our Sharia scholars were heard saying that we have to tolerate some amount of abuses because it is a nascent industry, infant industry, so if we raise our voice, it will kill the industry. In fact, for the Islamic bonds also the same logic was used by some of our scholars. But when you allow some abuses to grow into a monster, then it is a monster who now threatens the system. The monster needs to be killed. And who is going to kill the monster? Obviously, it is the average Muslim. It is the client. It is the customer. If the customer looks for halal income, institutions will be created, will come forward to provide him with that. If the customer is indifferent, he is comfortable with Arabized names. If it is Murabaha, it's okay, as long as he is not concerned about whether there is a real asset that is being bought and sold. He is being offered an Islamic product which is sold as Islamic. If he is comfortable with that, then of course people will be there to defraud you or cheat. They will take advantage of the religious fervor of the Muslims, and many of these fly-by-night operators will come forward. They will, and this has happened. I don't have to pick names. Those of you who are well informed, you might be knowing. There have been plenty of cases where people have tried to take advantage of the religious-minded or conscious investor who wants to put his money in halal avenues, and he tries to, but he doesn't ask the right questions. That could be one reason. Either he is not vigilant enough, he is not conscious enough, or he simply doesn't have enough knowledge. So what is important is to acquire basic knowledge of Islamic finance. It is not a tough discipline. These are some very basic understanding would help you differentiate between what is Islamic and what is not. And then one must ask these questions before you approach your Islamic banker. I think with that, I would just follow up my one-way presentation, and I would welcome questions from your side. I'm trying to answer to the best of my knowledge. Thank you.
Thank you very much, Doctor. It has been a very enlightening speech. Now this is the opportunity time for question and answer, and we are allowed to go up to 11:15. So we have 40 minutes from now. I encourage all of you to come forward and take the first opportunity. Sharp 11:15 will have to stop. Cordless mic will be passed for those who raise their hand, and we can start them. Yeah. And the questions will have to be strictly into the subject, based on the subject presented here. Any other questions will not be entertained.
Okay.
Especially installment basis. Suppose if I have full cash, I will go directly to the
Yes,
car showroom and I will buy it.
of course, yes.
Buying through Islamic bank, how is it benefit to me?
For example, you have you want a car whose price is 50,000 reals. I'll use the same example, and a car of a particular make you want for you. Now you approach an Islamic bank and you tell your banker that I need this car, and this is available in this particular showroom, and this is the price. The bank will tell you that please get me the documents, a quotation for the price and the make, everything. Then it is your job to go to the vendor and collect the documents, and once again approach the bank. The bank will now tell you that we will finance this car transaction, but we will basically charge you a profit of, let's say, 10%. Okay? And you have to, so the bank will buy this car, paying 50,000 to the vendor, to the car, to the dealer, to the car dealer, and then resell. That's the first sale contract. Bank has purchased the car, basically for you, on the basis of your promise. Okay? So the bank will purchase and then resell it to you at 55,000. Okay? That's the second sale transaction. These are two different sale transactions. In the first instance, the bank is buying the car, which basically you want, and you have informed the bank that please buy it for me, then resell to me. So there will be two sale transactions. First sale, the bank will buy it from the dealer and at 50,000, take possession of the car and the documents, and in the next stage, the bank will resell it to you, charging the mutually agreeable profit, or whatever is the bank, you have agreed, the bank and you have agreed. If it is 10%, 55,000 is the second price, the resale price. So you buy it for 55,000, repayable as per the mutually agreed installments. Why it is Islamic? Yeah. Yes. That's why I said in the beginning that it comes dangerously close to a conventional loan, but it is not same. What are the points of difference? For identifying the points of difference, you have to be a little imaginative. You have to imagine possible scenarios and then see how the conventional bank would behave and how the Islamic bank would behave. What are the rights and obligations of the conventional bank, and what are the rights and obligations of a Sharia bank? For example, you go Monday, pass on the information, the documents to the bank. The bank purchases the car from the vendor, makes the payment, okay, and asks you to come after 2 days for the resale or the next day. Now, between these 2 days, the car, while it is being brought to some banks indeed have their own way of nurturing all those activities which not only help you to protect these basic, requirements or the basic objectives, they also, all those activities must be nurtured through, and whatever means you adopt for achieving these basic objectives, that is what leads to the creation of an Islamic economy. So a financial system, if you see it on the face of it, by providing the linkage, the basic function is very much tries to nurture this, protection and nurturing of property, creation of wealth, and distribution, a fair distribution of wealth. These are all in line with the goals of the Sharia, and all the components of an Islamic economy, be it the Islamic bank or insurance company or any other component, be it an investment fund, all these are supposed to lead to the achievement of these objectives. So having a financial system, of course, all scholars agree that it's very, very important. If you don't have a financial system, you suffer. You cannot create wealth at the same rate as a conventional system is able to create. You cannot, if you don't create wealth, you have very little wealth to distribute. So in the face of, widespread poverty in the Muslim countries, obviously there's a very strong rationale for having a financial system. You need a financial system, a well-regulated, transparent financial system. But at the same time, the conventional financial system is not an answer to us because it violates some of the basic fundamental norms. What are these norms? The most important norm is the protection from, or the freedom from riba. Riba, as we understand, in general parlance, we see it as equivalent to interest. It is in fact the other way around. If you look at the way interest is charged by conventional banks, of course it is a form of riba, but the definition of riba is much wider than this. It includes many other forms of exploitation, which includes the charging of interest. And in fact, if you follow the literature that has developed in Islamic economics, in the early days there was a lot of confusion about the proper definition of riba, and people try to find a way out of trying to get around, the compounding interest and so on through charging of some excess and so on. Sometimes, designing a product in such a way so as to camouflage the riba. Fortunately, over time, this ignorance has, given way to enlightenment, and people now are generally, they agree on the proper definition of riba, what leads to riba, and there is a general agreement among the scholars on the definition and implications of riba. Riba is not permitted, and there are various forms of riba in which riba can manifest, and examples are just too many. The simplest example is when you put your money on interest-bearing deposit, where there is a contractual requirement, stipulation on the part of the bank to pay you something more than what you have deposited. So riba is basically loosely translated as excess. So if there is a contractual stipulation that yes, as per the contract, the deposit, when you put your money in a deposit, basically you are entering into a contract with a bank, with a commercial bank. And when you put your money, the bank is now legally required to pay something more than what you have deposited. Then the element of excess is deemed as riba. That's a very simple definition. There are many other, ways people have tried to circumvent the riba prohibition, and that has led to more complicated forms of riba. And in fact, the more interest you develop in modern finance, you will see how people have tried to circumvent this riba prohibition through bringing in complicated products, complex products. And for some time there is confusion, and some people feel, yes, these are Sharia compliant, but again, later on our Sharia scholars, our researchers are there to scrutinize, put under scrutiny every possible new product that appears on the scene, and then come up with their own analysis as to whether it is free from riba or still there is an element of riba in it. So that is the basic prohibition. The second important norm of Islamic finance is gharar. And gharar basically, again, has been translated in various ways, but again, in common parlance, we can see a gharar means uncertainty, gross uncertainty, which could be due to Uncertainty, again, is sometimes equated with risk. There are other ways of expressing this also. And in different books on Islamic banking and finance, you'll find different ways of explaining that. But let me put it this way, that it has several meanings. It doesn't have one single meaning. And one of these meaning is freedom from fraud or deceit. That if one of the parties, in fact, before I go to gharar, I think it's important to understand that Islamic banking, basically, it takes two forms. It uses two types of contracts, basically. One type of contract, they are sale-based. They use some kind of a trading mechanism, some kind of a trade, because trade is halal. So the bank will now design a product which is basically has a trading element in it. So it centers around almost basically structured around a trade. So these are trade-based. There are trade-based products, and there are also partnership-based products. In trade-based products, we have a range of products like murabaha. We have ijara, which is also a variant of trade, and we have salam, and we have, these are the most popular products, and we have istisna. I'll briefly define that at a later stage. But they are sale-based products, which are very popular with Islamic banks. And then you have the partnership-based products, which basically the most important ones are musharaka and mudaraba. Apart from these, there are various other contracts which are admissible, which are Shariah nominate contracts. Shariah is identified. They were used by Muslims in early days, but in modern banking and finance, Islamic banking, they have not been as popular for a variety of reasons. We don't have time to explore that. But what I just listed, these are the most important contracts. Now, of these two, the sale-based contracts are, again, more popular than the others. In fact, murabaha alone, which is basically a cost plus profit, a trade where the item is known and the seller charges an additional profit element, and then there is a sale contract with a deferred payment built into that. That becomes a financing product. Now, this is one of the most popular products by Islamic banks. And almost more than 3/4 of the total transactions, Islamic banking and finance transactions, they are concentrated in this murabaha alone. Now, this uses a trade mechanism. Now, if you are going for a trade-based product, obviously gharar becomes very important, because gharar is associated with a trade or a sale contract, where the seller is not supposed to hide any important information relating to the product attributes. And when a contract is made between a buyer and seller, between the bank and the client, then all the terms of the trade must be clearly stipulated in the contract. For example, I sell you something, I sell a car to you. We cannot enter into a valid contract by keeping the price unknown. The price must be determined in advance. The commodity that is being bought and sold must be determined, known to both the parties in advance, which basically, if you see the basic rationale, the rationale is to eliminate any possibility of fraud, that's number one, and deceit. Second is to eliminate any possibility of any conflict between the parties. Sharia doesn't want people to fight amongst themselves over contracts which have not been executed. So if you leave some features of the contract unspecified, we are not clear about and the price or what is to be delivered, in what form, where it is to be delivered, and so on, or the product attributes are not clearly specified, or they are specified wrongly, then these are the contracts which do not have a place in the Islamic system. We say there is prohibitive or there is excessive gharar in the contract. If, for example, the price is not known or the commodity that is being sold is not in existence. So there are various factors which can contribute to this uncertainty. For example, I sell you something which I don't have, as it happens in the stock markets. We call it short selling. I can go on selling you any amount, any number of shares of a particular commodity, particular company, even though I do not possess a single share. This is possible in the modern stock markets. But there's a fundamental violation of the norm of, this contract is supposed to contain excessive uncertainty about the possibility of settlement by the party which has sold, because it doesn't possess this particular share. Others don't have, they trade on the basis of papers, documents. Now the car could be housed in the warehouse of the vendor, but the paper as per the documents, the bank is now the owner on Monday, let's say. You are going to buy it again on Tuesday. Now, on Monday, after the bank becomes the owner, the car's price drastically goes down by 10%. The manufacturer makes the announcement that from tomorrow onwards, we will give a 10% discount. Okay? Now what happens to the customer? What happens to you? What would you do? Would you fulfill your promise the next day? Go and buy it at 50,000 plus 10%, 55,000, or you will avail of the 10% fall in the price, which is now available from another vendor. And perhaps approach another Islamic bank to finance it at the reduced price. And prices could move up, could move down, either way. We have free markets, and prices of some commodities could fluctuate drastically within a very short period of time. It all depends on the nature of the commodity. Now, this is one scenario. So there is a possibility, there is a motivation for you to go back on your promise. And what happens to the bank? The bank, of course, faces the promises of a cash loss. The bank buys today at 50,000, and after this purchase, the prices have gone down. The bank is stuck with the car, which is now valued at 45,000. That is one scenario. Second scenario is, the bank has now become the owner of the car, and the car catches fire. Unlikely scenario, but a possible scenario. Okay? There's a destruction of value before it is resold. Now the client is of course not going to buy it at the quoted price. That's the promise. Now again the bank is stuck with a loss. So the very fact that the bank is becoming an owner of the commodity and then reselling it, this is a trade transaction where, like any other trader in the market, the bank is exposed to risk of loss. Now the 10% promised profit will come only after the bank is able to resell it at 55,000. Am I clear? And such price fluctuations, they do happen. Now, of course, this is a grave risk for the bank, and many banks will not like to take this risk. Of course, now every Sharia scholar will agree that this is halal, because you are doing a reselling just like any dealer in the market. And you are taking the risk of ownership, even if for a day. There is a time gap between you buying the car, and again, these are two separate sale transactions. But what happens if the bank insists that both the transactions would be done in one sitting together without any time gap? And the customer also finds it convenient. Why should I go to the bank twice? Let me, get the documents, approach the bank on a particular date, and both the sale transactions, we will do it simultaneously. There is no time gap. Of course, a Sharia scholar or any, faqih will object to this. He will say, you are no different from a conventional bank, and the profit and the 10% that you are now saying it is profit, it is nothing but riba. That's the reason why in some Islamic banks, at least I'm aware of, the Sharia scholars are particular to the extent that they visit the warehouses of the bank to see if the goods in question that are being that form the basis of their murabaha transactions, they are actually, they exist in the warehouse of the bank or not, or this is all a fictitious transaction. There are other defaulters. There are other, banks which do engage in fictitious murabaha. So it's again for the customer or the Sharia scholar, the Sharia auditor, to do the proper investigation. That is point number one. What is the more important from an economic point of view, the difference between murabaha and the loan, the car loan, in fact. If you have, I'll just complete. This is a very important point. If a conventional loan, you have taken 50,000 at 10%, and you are unable to pay at the end of the year, or at the end of the agreed time period, what happens? The loan amount doesn't remain at 55. It keeps on growing on its own. At the end of the second year, it will be another. You have to multiply it by 1.1. Third year, another 1.1, and so on. And it will continue to increase depending on when you clear the liability. The liability will automatically increase. And herein lie the seeds of global instability and financial crisis. Believe me, this is the root cause of the financial crisis. When you allow the liabilities to grow on their own, in an Islamic bank, if you have agreed to pay up 55,000, okay, that is 50,000 plus 5,000 profit, your liability is restricted to 55,000. It cannot be 56. And if you are delaying, if you happen to, for some reason you are unable to pay up in time, then the bank cannot increase the amount of the liability at the predetermined rate. The bank is now, as per again the bank's complaint, that what happens to defaulters? They will have a field day with Islamic banks, because now you are providing a motivation to default, willful default. If you don't pay up in time, still the amount remains same. Again, that led many thinkers to real think through the problem, and the solution, the best possible solution, if I can think of, is that the bank can charge a penalty. It can charge a penalty as a deterrent, as a disciplinary device to bring in credit discipline, but at the same time, the bank cannot take the amount to its income statement, to its profit and loss account, to its balance sheet. It has to donate that amount to some charity. So banks do charge penalty now, Islamic banks, but they cannot, take that as a source of their own profits. That's not a profit for the bank. Beg your pardon?
In this case, bank will lose it because they have a budget of 50,000.
Yeah.
On the basis that he will repay it. And if he's defaulted, then all the discipline for the bank's accounting will be lost.
You are charging a penalty, so that will be a deterrent. People will not default unless they have a real problem. So there will not be deliberate or willful default. But there could be genuine default. And if there is a genuine default, you cannot charge somebody extra for a genuine default, because that is again another form of riba.
My point is,
Yes.
the risk of the bank is
No.
Please give your question through the microphone so that people know.
Ibrahim. My point is, the risk of the bank is more. Because suppose 10 people are defaulted, and as you said that the banks, how can they compensate it? How the bank can cover the risk?
Yeah. You are allowed to charge a profit in the first place. Okay? This profit, the rate of this profit, of course everyone agrees it should not be exploitative. But there is no sanctity about a certain rate of profit. If instead of 25% you charge 26% as profit, both are okay. So if you are an astute or a shrewd Islamic banker who can, through your statistical analysis, you can predict with reasonable degree of accuracy what is the degree of default that is going to happen due to genuine reasons, because deliberate and willful is now taken care of through the penalty mechanism. Now, if there are genuine cases of default, you will know from your experience. Now, this risk you can cover in the profit rate that you are initially charging. So there is no reason why the Islamic bank would be unprofitable. In fact, they are facing the charge of being too profitable. If you look at the profitability of the bank and the profit rates that they charge on Shariah compliant products like Murabaha, the general common observer of the scene tends to feel that the profit rates they charge tends to be too high. The most important reason for this is lack of competition. You don't have enough number of Islamic banks. So an Islamic bank can get away with a high rate of profit, because if Faqih doesn't prescribe what should be the upper limit on the profit that you can charge. Am I clear?
Sorry, Safa. Excuse me if this don't come under the scope of the talk today, but since you encourage asking questions and most of us are Indians, I would like to know what are the current scenario in India, government or otherwise, what mechanisms are available, Sharia complaints for common people. Thank you.
Okay. If you look at the Indian financial system, the regulations and the way these regulations have evolved, we have had Islamic products, right? In the, I think, 90s, when our Islamic equity funds were proliferating in the international markets, we also had an equity fund in India which marketed itself as an Islamic Sharia compliant equity fund. The reason was simple, that in equity market, given the stage of research at that point in time, Indian stock markets did offer a very large number of stocks which were Sharia compliant. In the mid-90s I'm talking about. Which means if you look at the capital market related regulations in India, there is enough room to come forward with venture capital funds. In fact, we have just had an Islamic venture capital fund in Kerala, operating from Kerala, which is approved by SEBI. And equity funds, of course, there is always a room for coming up with equity funds. There are many companies, many of them belong to IT sector, which do not borrow or lend, on the basis of interest. And some of our leading IT companies, they fall into that category. They are all qualified to be Sharia compliant. If you use the similar rules that are employed by most of our Sharia scholars. So, and within the SEBI regulations, in fact, that was in some of our early research on Islamic financial system in India. It is the investment products we found there was a maximum scope for, that's the easiest thing to start with. Because SEBI regulations were the sort of very close to the Islamic ideals. In some ways, they try to surpass even our the practices, ethical practices or unethical practices that were being done in other global markets. SEBI regulations, for example, if you see, it doesn't allow you to speculate. Indian mutual funds cannot speculate as per the SEBI regulations. And they are supposed to be very, very transparent in their dealings. And it was just, what was lacking was an initiative by some group to come up with a Sharia compliant mutual fund. The room was always there, that you can any day, any group of people or asset management company could have come up with an Islamic Sharia compliant fund. Because many of a very large chunk of Indian companies, they qualify to be included in a Muslim investor's portfolio. So capital market, very, very permissible. Nothing is there which really stops you from coming up with a Sharia compliant product. When it comes to banking and insurance, this is where the major problems lie as of now. The regulations, the banking regulations, they need major amendments, major changes to be able to facilitate the creation of an Islamic bank. There are, in fact, if you do a search on Economic Times on Islamic banking, in the first page itself, you will find 2 or 3 very good, well-written articles on what really constitutes a constraint, legally speaking, for the creation of an Islamic bank. Creation of Islamic bank will require major regulatory changes in the Banking Act, which would require a lot of political will to go through the process, to push through the process. Now coming to insurance, now whether the political will is available as of now or not, I will not comment on that. That is for every other observer to see and judge for himself and perhaps speculate about the future, what's going to happen. But there is a definite change in thinking, and a lot of observers or economists, they were not necessarily champions of Islamic finance, but they have started seeing the merits in Islamic banking, and they do not see it as a religious phenomenon or a religious activity, but something that is useful for everyone, something useful for the country, for the economy as a whole, and various ways are adopted to push forward this idea that Islamic banking is useful for India. One of these is the possibility of inflow of funds, Sharia compliant funds, seeking Sharia compliant avenues into India for development of its large infrastructure. Because infrastructure financing has always been a halal avenue for investment. You build roads. Building roads and building breweries are two different things. So when it comes to a company investing in a company, the company may not be easy to control by an investor in terms of his investment activities. The company may decide to engage in some forbidden activities. But if you are very clearly identifying yourself as an infrastructure development company, and the activity, the line of activities is of course very, very desirable for the country's development and also Sharia compliant. So this is one idea that is being marketed very strongly, that introduction of Sharia finance or India's openness to Sharia finance would be a boon for its infrastructure sector. For its own good, India should welcome. That's number one. Number two is there are hurdles in the Banking Act, of course, but acts can be changed, acts can be amended. It all requires a supporting regulatory and environment and a supporting attitude of the policymakers. If the policymakers want, they can bring in the changes, which currently they stop a bank, a commercial bank, from engaging in participation-based financing. They're not supposed to invest in equity. They're not supposed to do leasing they cannot invest in real estate except for their own branches and other things. So basically, everything in the present Banking Act, it discourages or it acts as a constraint for the creation of an Islamic bank. Now coming to insurance, if you're thinking in terms of a corporate form of insurance company, again there are major hurdles as of now, and you have the Insurance Regulatory Commission, and whose prescriptions are many for a new insurance company to come up, and the biggest stumbling block is the capital and also the weight is even in fact the corporate form of insurance there is a question mark on it, even when it takes the form of takaful. The takaful, which has the backing of all the Sharia scholars, is basically a mutual organization. It is not the corporate form or a joint stock company form of takaful. But later on, some Sharia scholars in some regions, they have taken a more liberal attitude, and they have also accepted joint stock or profit-making takaful companies to operate. But the original fatwa, if you see, of the general agreement among the Sharia scholars, was on the mutual form or the cooperative form of takaful, which is fully Sharia compliant, which has absolutely no room for any objection or any question mark. Now, when it comes to takaful in a cooperative form, again, Indian regulations, to the best of my understanding, it is very, very liberal. You have some very progressive cooperative acts in some states which allow you to engage in all kinds of activities which are considered to be beneficial for your members. In fact, that clearly opens the room for what is called Islamic microfinance, or also Islamic micro takaful, if you do it in a small scale among the members. And a cooperative takaful, which is the original, purest form of Islamic insurance, has a cooperative structure. It doesn't have a company format. So obviously, Indian regulation, there is still a lot that can be done without creating the ripples or without increasing the temperature, I would say, and making a matter of a kind of tug of war between pro and anti-Islamic banking lobbies. There is a lot of room. If the community wants, it can create a lot of institutions with its own efforts. And of course, to thrive and to grow, you certainly need the regulator support. You certainly need the regulatory changes. You certainly need the regulatory supporting environment.
My name is Abdul Aziz, student of Islamic Banking. In fact, I feel that I am an LKG student asking some questions to a lecturer or a lecturer. There will be some mistakes in my questions itself. Because what you are saying, you don't understand because of my lack of knowledge about this field. But anyhow, my question is that how far the attempts in Islam to establish an Islamic bank in India, what is the status now, and who is working sincerely to convince the Indian government to permit the Reserve Bank of India to get a license from the Islamic bank in India? That is my
under one roof, you can offer conventional banking and also Islamic banking. You need to have a separate entity even if you have the same shareholders, doesn't matter. The same business house, doesn't matter, the promoters. But you now have to subscribe to a different way of doing business. So Islamic banking is different. And Islamic banking is also more complex. It's not as easy as conventional banking. In fact, somebody said very rightly that the simplest, easiest business in the world is banking. That is conventional banking for you, the easiest way to make money, because you make money out of money, cash out of cash, without taking any risk. And bankers have coined a different term for this. They say we also take risk, that is default risk. But default risk is not the risk that we talk about in the context of a business. Now, of course, it's technically close to impossible to have both the operations under one roof, and also segregating your activity or creating a wall of separation, effective wall of separation, to carry on your haram activities under one roof, one side of the wall, and halal activities at the other side. It's almost impossible. Coming to your first question, I'm not a scholar of Islamic history. This is a fact. There could be some specific instances of some institutions operating, and it's also important how far you are going back in the history, in the Islamic history. When we talk about the times of the Prophet ﷺ or his companions, we certainly, the mechanisms that we now find, these mechanisms were prevalent. Contracts were being done, but they were not done in an organized way, as a kind of, you don't have a market or an institutional framework or a system which is, well-oiled and well-integrated system which has set its own rules and so on. No, there were rules of contracting between individuals. And these rules of contracting, if you see as a whole, obviously they would look like as if there was a vibrant market in existence, because every contract was subjected to same rules of Shariah. And there were a variety of products available. For the agricultural sector, salam was available as an exception to the general rule, where the farmers were given advance amount and they would repay in output. So basically the farmers were selling, though they didn't have the farm produce with them, going against the norm of gharar, do not sell what you do not have. But still that was allowed as an exception. Istisna and the various forms of bay or the basic sale contract, ijara, these were all taking place, but between individuals, not through organized institutions. There are some, cooperative mechanisms in place in the early Islamic history, which basically, push forward the idea of cooperation as the basis for forming an organization. But in the modern economy, you don't find, cooperative form being that popular. The joint stock company has taken its place, and now, again, for a variety of reasons, people justify why a joint stock company will be more successful than a cooperative for most of our activities. Because in a cooperative, you have one member, one vote. And you cannot think of a globally large cooperative and every one of them voting on every possible decision. So you have joint stock company, where basically you elect a board of directors on your behalf of the shareholders who have limited liability and who would basically run the show. So joint stock company or the corporation has become the more popular form of organization. So this is a natural, process of global integration, I would call it. Global integration and global organized marketplaces, which has thrown up new problems, the problem of speculation. To the best of my knowledge, there was not much possibility of speculation as we understand today in the stock markets. In cricket matches or basketball matches, we allow people to speculate. And they can speculate as organized betting places, connected through internet and so on and so forth. Now this was obviously not present in those days. So speculation of the kind that we see is a problem of this day. we can only compare it with the traditional forms of gambling which were prevalent in those days, like throwing an arrow and then the cash payment to you will be decided on where the arrow hits. So these were those traditional forms of gambling. Now we have different modern forms of gambling. But we have to understand this as gambling to apply that ruling which forbids this, all forms of gambling. And the second question on Dr. Wadood's contribution. In fact, I am, that is perhaps the second book I read on Islamic economics when I started reading my journey in Islamic banking and economics by Muhammad Ahmad, who is the father of this thought, which is now being actually carried forward by Dr. Khan. What I found in that book was the author didn't find musharaka, to be a good mechanism, to be a desirable mechanism for creating businesses, which I was a bit surprised, because most of the mainstream Islamic economists, they found partnership or musharaka between people as a very ideal way of organizing businesses. Okay, and this was what was prevalent in the times of the companions of the Prophet ﷺ and the times that followed. And today, if at all you are making a strong case in favor of Islamic economy and finance, the theoretical case is built based on partnership-based mechanism. In fact, in India, when this was marketed, this idea of Islamic banking, I think in 2007 we had a conference in Delhi. It was titled as participation banking, because that is how you market to the rest of the world, that here we have the conventional bank is based on a credit-based banking, but Islamic banking is more participation-based or partnership-based. And it is the partnership-based banking that has this edge over the credit-based banking, because it is a very robust kind of banking, immune to any kind of a financial crisis. And there are very, well-documented and well-publicized papers, research papers, some of them published by IMF economists too. IMF economists, I can quote Dr. Mohsin Khan and Abbas Mirakhur, executive directors of IMF. They published that first paper, which appeared in Times of India, I think, in late 80s, their findings, that here is a new concept of Islamic banking, which is, being advocated by Pakistan and other countries, Iran during those days, and which is supposed to be more robust, and this is the IMF paper which has been published. So I found it very surprising that, Muhammad Ahmad was a very well-known scholar at that time, and he didn't find Shariah to be desirable on the ground that it was abused. He had a point. And in fact, during the subsequent years, we find a lot of such participation-based institutions were created in Pakistan, and most of them turned out to be fly-by-night operators. They basically ran away with the money of the investors, and the regulations were not there at that time. And it was only as a response to this large-scale fraud by the Mudaraba company operators. In fact, there was an industry, whole gamut of such Mudaraba companies which defrauded the investors because they took shelter in the Shariah mechanism, the fiqhi rules of Shariah, which basically allows the Mudarib or the bank to share in the profits, but the losses have to be passed on to the Rabul Mal or the fund provider. So these Mudaraba companies took advantage of that, and they basically defrauded the investors. As a response to that, Pakistan came up with a regulation for Mudaraba companies, which tried to regulate the creation of such companies and so on. I think when Mahmoud Ahmad wrote his book, he basically, was able to foresee this problem that is coming. People abusing this, partnership mechanism, and because of that, he might have found it to be, not a desirable mechanism. But certainly, he didn't say it is un-Islamic. And then he came forward with the idea. He said that I've been looking for options, alternatives. And he came forward with the idea that and Murabaha is something he despised.